Hello, and thank you for checking out another brief video. Today, I want to talk about 2026 and some of the things that we see going on, and maybe some of the things that we should watch for the rest of the year. Just trying to really provide you guys a market update and just an update overall in general. So, the first few things that I would want to address is volatility, right? This year, obviously, we've had some changes. We started the year seemingly somewhat normal. Commodities were on a tear up, and that has since changed a little bit. And now oil is kind of on a tear up. Obviously, we all know why, mainly fueled by the war in the Middle East, Iran specifically. And we think that that trend of increased volatility will continue. We've seen heavy increases in volatility in the bond market. We've seen it in the stock market. Obviously, we've seen it in the commodity market, like I just mentioned. And we don't think that's going to change. We expect that to be here all of this year, maybe even moving forward into part of next year. So that's something to watch. It's just something to expect, right? This year is not going to be the easiest year for investors. However, with the good long-term strategy that takes into account your objectives and your values, we can still get through this without any problems. We are diversified, which is the name of the game, right? So as one asset class zigs, the other is supposed to zag. And that's what we expect to happen this year. We know that there's going to be uncertainty, and we would just expect that moving forward. Interest rates. I have a chart up here that I want to show you guys about interest rates, specifically the Fed and interest rates. Okay, so we have been on the camp or under the belief for many years that the Fed follows the 2-year interest rate. So when you hear the Fed and Trump and all the politicians and the talking heads talking about moving interest rates, we expect that this could happen into the future, but we still expect that the Fed is not the driving force behind interest rates. This chart here shows you the blue line is interest rates in the noted by the 2-year Treasury, which is a rate that is set by the free market. And the Fed funds rate is the rate that the Federal Reserve sets for us to base our quote unquote economy after. So if you see here down in this chart, sorry about the bar that's constantly on there, you will see times where this blue line goes way up, and you can see the massive lag that the Fed has in this red line as they step up slowly following the 2-year, which is the blue line. Right, same thing on the way down over here. The market falls, the 2-year falls, and the red line does not fall as fast, meaning they are totally following the blue line. Okay, does this actually mean anything that we need to, be all that urgently concerned with? No. However, the Fed is not the holy grail of our economy and of our market. What we need to realize is that the Fed follows the 2-year. If we want to kind of know where interest rates are going or what's going on with interest rates, all we need to do is watch the 2-year. The 2-year is an important rate. It's driven partially by growth and inflation expectations. So what we've seen here recently is a spike up in oil prices, which typically would mean that we are going to see higher inflation kind of across the board, which is why I believe we've seen a small tick up in interest rates here in the last couple of weeks. I think that's expected, and we could see that continue as we move forward until it changes, right? Demand is obviously also a major factor with oil prices. Right, oil prices could be at $200 a barrel. I don't expect that, but they could be. And if that would happen, that would absolutely crush demand, which would bring the prices back down, which, if that were to happen, that would also bring inflation numbers back down. The The idea of global liquidity is something else that I kind of want to take note of. Global markets have came to life over the course of the last year, which has been good for us because we're exposed to those. However, that is also an issue with regards to liquidity, right? So as global markets perform well, that's one factor. Global markets also have what I would consider is a massive need for dollars. So as global markets see liquidity and volatility change and continue to change and evolve over time, that could and usually does bring an increased demand for the dollar, meaning the local currencies in some of these markets are not going to be able to perform as well as the dollar market will, mostly from a currency perspective. So a lot of times what that causes is a rise in the value of the dollar and some changes in the kind of pairs or the global markets that are backing up our market. The last thing that I would bring up, and this is not something that we need to spend a lot of time thinking about or focusing on, but diversification, right? We all know what that word means. Don't have all your eggs in one basket. We cannot think of a more appropriate time to bring this up and continue to remind ourselves and obviously you guys that diversification is important. We need to stay balanced as we go through these times of uncertainty, of volatility. That is the name of the game, right? I don't have a crystal ball that's going to tell me exactly where the market's headed. I hope you guys don't, because if you would, I'd want to know about it. But obviously, we don't have that. So we just kind of have to play the cards that we're dealt and make the best decisions that we can. And a key factor in that is having balance in your overall outlook and mentality moving forward, right? This is vital. This is important. Stay diversified and just expect some changes. So we'll see what this holds. I have no clue how long this war is going to last. Obviously, none of us really do. But this is a big deal for us. I mean, this is a big deal for all global markets. As we've already invaded Venezuela this year. Right now, obviously, we're in Iran. I've heard talks about Cuba being next. Obviously, I have no idea. But I think as we get closer and closer to the next election, I'm betting, I not really betting, but I'm thinking that some of this could change and maybe be pulled back or reined in or tamed down so that Trump can start to worry and think about gas prices. I am under the belief that gas prices are important for elections, and I think that most politicians understand this. And I think that Trump is aware that if we are sitting at $4 or $5 a gallon for the price of fuel, that will not fare well for the next election for Trump and any of his cohorts. So I would be under the belief that we are doing this far enough in advance of those elections that we can likely see oil and some of these prices pull back before those elections. Obviously, I don't know this, but time shall tell. Have a good one, and I will talk to you guys soon.